Welcome, welcome. Godric here, your stock market mentor. Got my journal. Got my high quality pencils. Ready for you tonight? Gonna look at some stocks tonight. Extra day. I came in Monday. Now I'm back Wednesday. What happened today? E. coli got someone at McDonald's, and the stock dropped like 16 points, and the whole Dow Jones went down. There's 400 points, most of it's from McDonald's right behind me. So that's always a bummer. That's just going to happen, though. I remember it happened with Chipotle, and stock went down, but nobody was unalived. It was just they got sick. But now it's McDonald's, and McDonald's is interesting because they do franchises, so they're going to have some responsibility to the franchisor, not only the company. So that's kind of better in a way for the corporation because they're not 100% responsible. Because the franchisee is responsible for what happens in their store. So maybe they did something wrong, then that protects McDonald's in a way, at least legally. But in a case like this, in a general sense, if you like McDonald's, the stock was about what? Let me pull it up. It was like 280. Let me look. Welcome, guys. Appreciate you. I'm going to talk about stocks tonight. Here's your extra night from Godric. October 23, 2024, Wednesday. The Dow Jones was off 400 today to 42,514. McDonald's was down 16th, a major drag on the Dow Jones. Let me log in and see what else I can get for you. I'm going to go on for about an hour tonight. I'm going to talk about some positions. Going to talk about some stocks. Join in. Ask questions. I have a system. You can learn the system. You can pay all your bills and retire in the stock market. Appreciate you. Sergio, welcome. JM, welcome. Recommends life, welcome. User 7876, welcome. No, welcome. Bubble just popped. I don't think so. I don't think we're going to get a correction right now. There's just too much going on that's positive. If you compare the world to the U.S., that's where you get the perspective. We're the GOAT, greatest of all time. And in perspective, we're the best. That's why all the money's flowing into the S&P 500, not the other countries. And I think we're going higher. We're going to go higher. That's what I'm seeing. Only time will tell. Yeah, so McDonald's got hit pretty hard. Okay, so it was 298 down 16. So it was about 314. Went down to 298. Not a huge 5% drop. It's like a drop in the bucket. So the point is, when this happens, like a bad news, but we know that they can recover, what some investors do is look to buy, because they're buying the dip, you see. It's a meaningful dip, 5%. And if you like McDonald's, you can buy the dip, and probably what will happen, it'll probably go right back up. 5 years chart. So check your stock if it has a nice 5-year chart. If you look at McDonald's, what I'm showing here is a price of $192 5 years ago, and now it's past 300. So went up over 33%, right? So that's a nice 5-year chart. They have dividends. They have earnings reports. It's a nice, just goes up real nicely. Just pull it up on your phone app, McDonald's 5 years. You'll see how nice it is. Has some criteria. Has a volume. McDonald's volume, 18 million today. Well, that's a lot. That's extra, right? Because it was a sell-off. But if it's over 2 or 3 million, you're doing good. PE. Let's look at McDonald's PE. I'm showing 27. So a little bit higher than average, but still a robust, healthy, high-priced PE. Dividend. Does McDonald's? I don't see a dividend. I thought McDonald's had a dividend. Schwab needs to update. Schwab is doing an update right now. Okay, so the point is, when you have a situation like this, if you like the stock, you can buy the dip. Because there's litigation, oh, here we go. Annual dividend, 2.25%. All right. So, decent dividend, not a huge dividend, but enough to make a difference. So you got dividend stocks. People are going to still go to McDonald's. It may go down more because there may be like more litigation or like more lawsuits, whatever. But it's going to be kind of limited to that. You know, we think probably the worst is over. So that's the point I wanted to make. So the Dow Jones minus 400 is really kind of just one stock that's doing that. That's my point. Welcome, guys. Godric here. Wednesday night for you, 10:23. Go look at some stocks and look at some positions. I'll take your questions. If there's any gifters, throw me a crane or two, appreciate it, or some roses. If anybody wants to sub, I will walk the subs through any questions they have, any trades they want to do, show you how to work my system to get paid every month. I will walk the subs through any questions they have, any trades they want to do, show you how to work my system to get paid every month. I will walk the subs through any questions they have, any trades they want to do, show you how to work my system to get paid every month, pay your bills, and retire into the stock market. Shriram, appreciate you. Shriram, I only take subs up. If you sub, you can come up. Okay. Sub's only $5 a month. Throw me a sub, and I can make sure I answer your questions. I can bring you up here, and we can talk in DMs. That's why I give up the subs. So be worth your while. All right, guys. Okay, so that happened to McDonald's today. That stuff happens, and that kind of stuff kind of keeps people out of the market because these tips and turvy turns make people get scared and, oh, look, my stock is down. You know, they get emotionally hurt, and sometimes they just, you know, they'll sell, they'll take a loss, they'll never come back. And that's not a trader. That's kind of like somebody who's trying to always be safe, but you can't. If you're in business, there's no guarantee ever. You know that. There's no safety. The safety is your intelligence, your trades, and your perspective and how to handle your own business. Where there's reward, there's got to be risk. That's just how it works. If you're trying to be safe, 100%, I say just stay out of the market because there's going to be roller coaster rides where you may be down, your shares may be down. It's no different than owning real estate, having a big 10-unit rental, rent out the rooms. You got 10 renters paying you monthly rent. You know, there could be a lawsuit. You know, somebody could fall on a ladder. You know, slip down your steps. You know, you could have the real estate bubble can make your real estate property value go down. You know, things like this. You may have to fix some toilets. You know, so any business you're going to have. You know, risk, expenses. You know, so just think about it like that. Think about that cost of doing business. And if you did buy McDonald's at the dip, you know, you'd be all the smarter if it did another 5 years of this chart, which it just did. It went up nicely, 33%. And all those dividends, you know, all those earnings reports. McDonald's Corporation operates and franchises restaurants under the McDonald's brand in the United States and internationally. It offers food and beverages, including hamburgers and cheeseburgers, various chicken sandwiches, fries, shakes, desserts, sundaes, cookies, pies, soft drinks. Oh, they have oatmeal too. Get that oatmeal. Coffee and beverages. Oh, and the soft serve ice cream. and full of limited breakfast, as well as sells various other products during limited time promotions. Company owns and operates under various structures comprising of conventional franchise, development, license. I wanted to see where they was founded in 1940, Chicago, Illinois. I wanted to see how many countries they're in. They're probably in 100 countries or more. And that's kind of the best thing you want to be. You don't want to be like in like a two-man operation. You want to be worldwide, I think. Because it's diversified, it's out there, you have a product, you have a service, you have profit. That's why that's better. Dr. Jim, Mr. Iris, you think NVIDIA can hit 165 soon? I can tell you about NVIDIA. Let's take a look. NVIDIA. Okay, 139 today, 139.56, down 4. It hit a high of about 140-ish. 140. The high was 142. 142.91 was the high, right around there. I look at the 6-month chart when I look at if the stock can go up. It has a nice trading range. The stock's going up over the last 6 months. The volume is nice and heavy. It has it. Listen, if you trade NVIDIA, it has a W pattern between July and September, and it hit the W and went up, and it hit a new high. So probably it'll go higher, 150, 160. Let's see. This is we're going into October, November. I would say it breaks 150, 160 by January, February next year. If the market keeps up, yeah, that's what we're gonna do. You heard it here first. Mark my words. NVIDIA is going up. It broke the all-time high. You can go by. It won't get you. Questions. I'm going to scroll back and get your questions, but if I miss your question, just write it again, because I can only scroll back so far. You guys want to throw me some likes? I appreciate you. Get these likes up. Pat, 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 like a video game. But NVIDIA is like golden right now. I think they're going to keep going up. Okay. Do you see NVIDIA reaching in a month? It's hard to say like exactly where NVIDIA will be in a month, but it's definitely going to probably be higher. What I see is with the new highs like this, they break the new high and then they go higher. So, 145, maybe 150. Not in a month, but let's say after the new year, there's always going to be, I think, we'll have a little Santa Claus rally this year, so probably the market will edge up, and we're going to have the best returns around early January. And if you're trading and you get a meaningful gain, then just sell, Sell and wait for a pullback before you buy again. Even if NVIDIA gives you 5 points in a month, that's great. It's a great return. We're getting like 7 points on the cover call of NVIDIA. So we get 7 points on the cover call. We'll be happy to get half that in share growth. NVIDIA's the boss right now. None of the top 50 European companies were founded in the last 100 years. Anti-business. Austin, you're making a good point, bro. If you compare the U.S. to other countries' stock market, there's no comparison. The U.S. has something like $55 trillion invested, and just S&P 500 has more money and more business than all those companies across the world. There's only a couple companies that can really even measure up to, NVIDIA and Apple and Google and Amazon. There's only a handful of companies that can even measure up to these top brass S&P 500 companies. I will say, if you look at India, they have no Microsoft. There's no Microsoft in India, which is 3,500 with full return since inception. There's no Google or Amazon in China. In Japan, there isn't any. There's nothing like that. It's a very limited return. So you really only invest in those countries if you're trying to diversify, because the U.S. is going to give you a better overall return. That's what I see. If you look at like the Nikkei, it gained like 10% in like 30 years. It's sad. There's no comparison to the U.S. I think a lot of it is fewer legal troubles, less litigation, easier, less red tape to own a business, to run a business, less taxes. I think that's a lot of it. Less restriction, less regulation. That's what I want to say. Less regulation on companies in America, as far as if you go to Russia or Germany or all these other countries that have a stock market, but it's nothing like the Nasdaq, the New York Stock Exchange, or the S&P 500. What else? Questions? Appreciate you. Thank you. Peanut Butter just joined. Welcome. Christopher Ken, welcome. Tesla premiums are juicy, especially with Tesla's earnings. Gerardo Morales, Tesla premiums. Yes, we were getting $1,000 on a cover call of Tesla every month. So like, if the stock is, let me pull Tesla up, okay? And I'm teaching you guys how to do cover calls, which is probably the best overall trade in the stock market. Cover calls. Tesla was at 239 at the close. Sorry, I screwed up. Tesla was 213 at the close. It went to 239 after hours because it hit earnings. So 26 points it went up. Right? So that doesn't happen every day. But it just tells you what earnings can do for you. But the 213, I have it here actually, if I can show you. The Tesla cover call. I can show you. Here, I have a picture for you. Check this out. Here's Tesla today. When it hit a low at 212, then it went to 240 after hours. Basically like a 30-point move. Look at this. Look at this price, 213. It was down 4 today, so it's kind of like they were worried, before earnings. It kind of sold off. That's a good time to sell naked puts when the stock is down, because the naked puts pay you more money. Let me give you an example. Okay, here's Tesla. Look at the volume, 80 million, which is very nice. Look at the market cap, 682 billion, and like tomorrow it'll be much higher because it went up 26 points in after hours. So we'll see where it opens tomorrow. Here's what I'm going to show you. Here's the Tesla options. This is November 22nd, 30 days out. Okay. Look here. I'll back up for you. So this is what we're getting in Tesla. If you buy the shares here at 213 as of close, before the close, right? You go out and you go to in this case, the 220, and you write the cover call, or you can go the 225 also. But the 220 pays $12. You see, the 225 pays $10 and change. That's $1,200 and $1,000 right in the cover call for agreeing to buy the shares at 213, which you buy 213.65. You buy them at the market. Then you write the cover call for higher up for 220 or 225. You get paid $1,200 if you write in the 220. You get paid $1,000 if you write in the 225 and change, which is agree to sell it at either 220 or 225. That's the value of Tesla. That's the monthly cover call. And I just went out 30 days from today, and you can do it every month. And let's do the math. Okay, I'm gonna just cut off the change because the price can move. I'm rounding down so you can like mess up and still do this. Tesla. Calculator. Do the math. So your investment on a $213 stock is $21,300. Okay. And then I'm showing you premiums of $12 and $10, right? I'm just going to cut off the change and make it easy for you. So if you write the 225 cover call minus 1 cover call November 22, 2024, that's 10 points divided by the share price of 213. 4.69% for Tesla. I'll write my book because I take notes. Write this down, okay? Tesla monthly CC 213 to 225 equals $12. 15 is what it says. 12.15. That's $1,215 income for a $21,300 investment. What can you do with $1,200 a month? Pay your rent. 4.69% return. Okay, so what I see right away in my mind, I'm like at the grocery store, I'm thinking about the cover calls, right? I see that's going to give us 46.9% return a year, because I can write 10 cover calls or more, or 12, but let's say 10. You get 4.6% a month on income, and when that money drops in your account, you can buy the shares or you can just pay your bills, write a check. I got check writing on the account, so just write checks, pay the bills from your account. Mortgage, rent, food, credit card payments, storage, car note, right? Water and power, etc., phone bill, right? You just pay all the bills up to $1,200 right there. Additionally, if the stock goes up to 225, you're going to also gain 12 more points of share growth, because you bought the shares at 213.65. It can go to 225. You're getting more money from the shares going up. But once it hits 225, you're capped, and that's the mechanics of the cover call. Like, you can make a little money up to the share price you write, but not beyond that. And for that, you're going to get paid X dollars. So if you look at the 225, it's paying 10.25. Okay, I screwed up. Hang on. I was showing you. Wait, let's do that again. I was showing you the 220 and the 225. Let me do this over to make sure. The 225, which gives you 12 points. I'm sorry, 10.25 divided by your cost of 213.65. Let's do that again. I get 4.79% return. Okay, but if you write the 220 now you're only allowing for 7 points of share growth, because you buy the shares at 213. You write the 220 cover call for 30 days out. That's only 7 points. Actually, it's 635 because it's 213.65. So you can only have 635 maximum, 635 share growth. And for that, you're getting paid $1,215. And this return is more, 12.15 divided by 213.65. This is the monthly cover call of Tesla. Write it down in your journals. This one pays 5.68% return, and that's 56.8% return for the year. That's how I do it in my mind. So another way you can look at it is an investment of $21,300 brings in $1,015 at the 7-point share growth, or the 220 call, and it brings in $1,215 at the 220 call, and it brings in $1,015 at the 225 call. If it's $1,200 a month, that's like $12,000 a year income. That's your business. If it's $1,000 a month, it's about $10,000 a year income. I always say write 10 cover calls a year because there'll be times when I'm going to wait a day or two. I'm going to say, hey, you know, Tesla's down. Let me wait till it swings up, and I'll write the cover call because when it swings up, I get a little more money. Hey, it's not the right price. The stock went up. Let me wait before I buy the stock back, before I buy the shares. Let me buy the shares at a dip. So I'm waiting for the right time to trade. Write that down. A proper trader is waiting for the right time to trade. You're not just trading willy-nilly crazy. You're waiting for the right times, right? Like when the stock is down 4 points, it's a good time to sell the naked put. And that, I want to see if I can show you here. Tesla. Oh, this is the deep in the money cover call. You guys are going crazy on the questions. I'm trying to explain something. Gold doesn't fluctuate, so it's not really an investment. That's why people buy it. Ape Supreme. Gold doesn't fluctuate. Gold is up to $2,700 right now, so it's really going up. You can't write cover calls on gold, you know, but you know what I like to do? I like to buy the gold coins. They're like $2,700 right now, but maybe wait till they dip. The silver coins are like $30, $25, $30, $33. And you just kind of like play with them, you know. They're kind of like, you have them like for trinkets, you know. It's an investment that's going to maintain value, I think. They don't fluctuate that much. They do fluctuate, but not so much. Yes, you can sell cover calls on gold. Okay, I lied. Michael G. You can sell cover calls on gold in the stock market, but not on the actual coins. If you get the coins, like I'm telling you. You know why? I'll tell you a story. I met a guy years back. He traded commodities. He was a soybean trader, right? Smart guy. He built his account to $1 million. This guy was on cloud 9. He was all like, Codrick, check it out. I got it made. What happened was within, I don't know, I talked to him like 9 months later, he lost it all. So he wasn't able to maintain it. He broke the $1 million mark, but wasn't able to maintain it. So the story the experience I want you to learn from that is when you hit the goal, or when you hit cloud 9 or hit the jackpot, have something to show for it. Like if he just bought a stack of gold coins like this much, he would have had something to show for it. If he paid, he said, God, I didn't pay my mortgage. I didn't do nothing. It came and gone. Pay your mortgage, dude. Have something to show for it. Buy some gold coins, some silver coins, you know. So yes, if you buy the gold ETF or the gold stocks, you can write cover calls on it. But I meant if you actually buy the gold coins, you can like juggle with, you know, like give out as presents. That's what I meant. Different idea, same idea, different thing. Same thing, different thing. But thank you, Michael G. Appreciate you. I can tell you're a stock market trader yourself. Is there somewhere to view current value of contract with market close? Is it estimated? Deadbolt. Is there somewhere to view the current value of a contract with a market close, or is it estimated? Well, first of all, you need a stock market account, and I recommend Schwab, right? But Schwab is not going to tell you the options overnight because the option market's closed, and it's only really a guess what the option prices are until tomorrow, until the option market opens tomorrow. So you have to wait till tomorrow. I wouldn't guess where the option is going to be. You can just kind of know after you have experience in trading. But tomorrow, like for Tesla, it's going to be a lot of volume, a lot of crazy trading at the open. So we have to see where it opens, where it lands tomorrow. Let's say it's the same price, $239. Okay, in that case, you can tell the options are going to be pretty much the same as far as the intrinsic value and the extrinsic value. So like, for example, at the 213, right, for the close of Wednesday, let me pull up the options. Well, actually, it's right here. This is a deep in the money cover call. Let me show you for a second. I was here. Is that here? Do you see how at the money, let's say the 210. The 210 was 16 points, right? And the 215 was 14 points on the call for Tesla. This is 1 month out, okay? So tomorrow, at the money is going to be about $15. I'll guarantee you. I bet someone $5 that the 240 will be $15 tomorrow. So I'm just using today's prices and putting it to the difference between the option at the money, the call at the money, what it is today, to what it could be tomorrow. So if the stock went up 26 points, right, you use the same value of the option at the money. So this one's showing me it's going to be, the at the money is going to be between around $15. So tomorrow, let's say the 240 should be around $15. Could be a little more if the options heat up. Could be a little less if people aren't buying those options, but it's going to be about that. You can't tell when the market's closed, to answer your question. You have to wait till the market opens tomorrow and get the real prices. But you can't trade anyways until it opens. Okay, yes you can. Gold futures is gold currency. It's called delivery. It's called gold call options. Michael G, bro, do your live and explain to us, and then we can do that. We can write cover calls on our gold coins that I have in my. I mean, that's what I like about cover calls, because you're taking an investment. You know, in this case, Tesla shares, or Palantir shares, or McDonald's shares, or whatever, and you're getting a monthly income off those just by giving away some of the upside. It's not unlike having an apartment, let's say 10 units, and renting out the rooms. Every room gets income. So every lot of 100 shares gets income. So for a real estate investor, rent out the rooms. Stock market investor sells cover calls on every lot of 100 shares for income. But I don't see how you can write cover calls on a stack of gold coins in your living room. I mean, you'll have to teach me how to do that. I'll listen. I'll take notes. Michael G, better do your own live. I'll follow. Is there somewhere to view? Okay, I read that one. I suggest Tesla cheap and affordable. Tesla's a good price right now. Gold doesn't fluctuate so much. Options are priced in already, especially after earnings. Want to invest about $200. Do Tesla buy or gold? Stu wants to invest $200. Well, you could buy a share of Tesla today for $213. Tomorrow's going to be $240. That's just how it works. For $200, you can buy. Well, let's see. I want to give you stock that's going to go up, right? Roku. What did Roku do today? Roku has an interesting 6-month chart. If you do charting, it's kind of creeping up. It's kind of doing what McDonald's did in 5 years, but it's doing it in 6 months. Roku, ROKU, I think that one's going up. If you have $200, let's see how much you can get. 200 divided by 73. Almost 3 shares. If you buy 3 shares, like 220, you can buy 3 shares of Roku. I would not buy call options. I buy shares. Because why? Because your shares are going to be there. If you have a decent stock, and I'm telling you how to pick decent stocks, you know, go with volume, go with heavy volume, go with a 10-year chart that goes from the bottom left to the top right. Go with a stock that has a PE. Go with a stock that has dividends. It has stock splits. If you have a good stock, the shares are going to be there in 3 years and 5 years. So if you go with a call option, let's just be real. Most of you guys buy call options like you're gambling in Vegas. Like literally, like you're going to buy like a $1 call option, you know, and you want it to go to the moon. You want that $1 call option to go to $3 or $4, and then you'll be happy. But what happens? It probably doesn't go to that, and you probably end up going down and expiring worthless. And that's how a lot of investors lost all the money in call options. But that one share, even if it's only one share, it's still going to be there. It might be a little lower. But if you get a good stock that's going up, then you'll make some money over time, and you put more money. You don't just start with $200. You start with $200, but then you add another 200, another 200. You keep going. You build it up, man. It's like your religion, dude. You're doing it like to save your life. Like, that's sacred money, investment, to put in great investment in great stocks. And over time, yes, you'll make money. You'll lose some money. You probably will pick some lemons, not knowing what you're doing. And lemons go down and you lose some money. But you learn, you lick your wounds, you learn from your mistakes, you pick better. You stay away from penny stocks, stay away from call options when you start out, and learn about quality over quantity. Invest like you're buying a company that's like has all the check marks, And over time, you'll learn. You'll probably do okay. That's what I'll do. That's my advice. I'm gonna scroll back, but I can't go that far. Equitas. Hey, Equitas, welcome, bro. How are you? Look at, he's a star subber, dude. You come to Godric. Potential selling, cover calls, plays for Tesla. Say it settles around 240. Potential weekly or monthly. Yeah, I wouldn't do weekly. It's just too much mental gymnastics. I do monthly cover calls. So let's say it set up for 240. You're gonna, like I was saying, the 240 strike will be paying $15. But if you write 10 points higher, you get $1,000. So I would write, either $1,200 or $1,000 every month on Tesla. It'll still be around that. You're writing the sweet spot, which is when the premium of the cover call is the same amount as the share growth potential between the share price and the strike you write. So if Tesla's 240 tomorrow and the 250 pays 10 points for 1 month out, then that's $1,000 you'll get every month, and that's a 10-point possible share growth. That's the sweet spot right there. It probably will be more. It probably will be $1,100, $1,200, but I don't want to. I'm just rounding down, so you're not upset when you see the real price. It might be a little lower, but it'll be at least $1,000. So Tesla's a good investment. Most stocks are not Tesla. Most stocks will not give you a great cover call. A lot of stocks will pay 1%, 2% a month, and at that point, you might as well buy the calls or just buy the shares, because you're not getting enough money on the cover calls to make it worth it, to make it worth riding this roller coaster. You might as well just hold the shares and get the dividends. If you can get between 3 and 5% per month on the cover calls, that's the magic. That's the magic of the trade. And if you can do that consistently, after, let's say 5%, which you're getting easily in Tesla, 5% means 50% a year. And 50% a year means 100% in 2 years. And if you get 100% in 2 years, you've doubled your money. And let's say you were just on 100 shares of Tesla, and you doubled your money in 2 years just doing the cover calls, keeping all the money separate, different accounts. The premium in one account, the shares in one account. Now you've doubled your money, and you go into what's called the cash cow position, where you made all your money back for your investment, and it's still making you money. So after 2 years, your return is 100%. After 4 years, your return is going to be 200%. And you get to the point where even if the stock goes to zero, you still make great money because all the premiums come in monthly. So don't think of it just you're going to make one trade and run away. You make one trade, you get 5%, ideally 4%, 5%. But you're making 10 trades a year. So you're going to do 10 cover calls a year. You're going to plan on that. So you're really thinking about, what is my return going to be in 10 years? In 10 months. That's what I look at. So when I start getting 5%, 6% return on the cover calls, I don't mind some share movement. I don't mind some downturns, Because if I learn how to trade those downturns, I can trade at the right time get the best bang for my buck, get the cover calls, not get hurt too much on the share price. Because remember, I'm buying a stock that's going up anyways over time, ideally, or maintaining. I'm not buying a stock that's going down. Roku, the reason I say Roku is because it has a nice double top mountain pre-COVID. $400 a share, for something. And it sold down really gradually through COVID and after. And now it seems to have hit a double bottom. It's doing this cup with the handle pattern. Write this down. Cup with the handle pattern is the best pattern ever. Okay? Starting to look like that. And what's going to happen? Boom! And it's going to go. If it goes back to those old highs, 200, 300, 400. This is a stock that can move 100 or 200 points or 300 points. Okay, if it can match the old highs pre-COVID, what? Like Apple did, like Google did, like Amazon did, like Starbucks, Netflix, all the companies came back. Now Roku isn't those companies. There's more risk. I mean, it doesn't have a PE. It's struggling to make a profit, but they have revenue. Take a look. They have 11 billion market cap. The share price is $73.50, so robust. The volume is about 3 million, 4 million a day, so great volume. Roku, together with its subsidiaries, operates a TV streamline platform in the United States and internationally. The company operates in two segments, platform and devices. Its streaming platform allows users to find and access TV shows, movies, news, sports, and others. The platform segments offers digital advertising, including direct and programmatic video advertising, media entertainment, promotional spending. So you use a Roku TV or Roku device to streamline your Hulu or Netflix or Amazon Prime, and then they have a Roku TV channel that has constant channels TV, and they have their own movies. So I think they're going to be okay. I mean, they have revenue. Take a look at it. So I think that's one of the stocks that can really go up. Now, if you did like Roku or other stock like Roku, and it can go up to these old highs of 200, 300, 400 points, ideally you want to look at some call options. Not saying to buy call options in Roku, but if you're going to buy the shares, you can support some shares with some call options. Why? Because call options have leverage, right? And if we are able to capture those old highs, 300, 400, then those call options, let's say you're at times 10 leverage, and then you get 10, 100, 200 points, exponential growth. And that's how people make a lot of money and also lose a lot of money. So you've been warned. You can lose everything. You can lose all your call options. And like I said, start with shares. Don't get greedy. And then to support your shares, you can throw in a few call options, But they say risk capital only. Welcome, guys. Don't put your rent money in call options. Okay, you've been warned. Don't put money that you have to pay Fat Tony in call options, because that's not money you want to risk. Stock can go down and you'll lose everything, but the shares will still be there. Equities, bro. If you're here, bro, request up. Come on up. Equities. Anybody who subs can come up right now. Long-term Walmart stocks catches up to Target stock. Walmart catches up to Target. P.O. Joy. Long-term Walmart stock catches up to Target. Let's take a look. Walmart. What's Target symbol? Walmart is doing pretty good. I like the market cap of Walmart. It wasn't quite Amazon. It got dethroned by Amazon, but it was doing well in the last 6 months. The 5-year chart of Walmart goes from 39 to 83. So almost triple in 5 years. That's the kind of stock you want. Just look at your stock 5 years ago. What's going to happen? So it's going to do the same thing in the next 5 years. Because they tend to be consistent, you know. There's a trend. Like, look at the trend, follow the trend. Walmart has great volume, 13 million today. Has a dividend, 1% dividend. 1% is better than nothing. Has a PE, 42, a high PE, but it's Walmart, so they're solid. Market cap, 669 billion. I know that they have 2 million employees, a lot of jobs, a lot of employees. They have a lot of stores. They're doing great. Walmart engages in the operation of retail, wholesale, other units, and e-commerce worldwide. The company operates through 3 segments: Walmart US, Walmart International, and Sam's Club. They own Sam's Club. It operates super centers, supermarkets, hypermarkets, warehouse clubs, cash and carry stores, and discount stores under Walmart and Walmart neighborhood markets. Oh, did you guys go to that Walmart neighborhood store? A little different, kind of cool. They have a deli and stuff. Target. What's the symbol for Target? Anybody? Hook it up for Godric. I'm liking Starbucks at the moment. Yeah, Starbucks is good. I love Starbucks. I love Starbucks product. Costco's nice. I love Costco. I'm up 400% in Walmart. Dan the Man 89. Up 400% in Walmart. Thanks for sharing, Dan. You can be up 400% in these stocks after a certain time of trading or investing. It's not that uncommon. It's uncommon, but not that uncommon. You guys know who I'm talking about. Some of you guys are up. When you start getting stock splits, you're up double, triple, quadruple, you know, of these stock splits over time. The stock goes right back up to the old high. Nobody told me what target symbol is. Let's see what you're talking about. Target symbol, stock symbol. You guys use ChatGPT. It's like one of the coolest things. Okay, Target Corp. Symbol TGT. 148 a share. TGT. So you're saying, well, Walmart reached Target, right? Well, let me tell you something. Target is no Walmart. Okay, Target is not anywhere near what Walmart is. First of all, remember I told you Walmart tripled in 5 years, or almost? Target was $110 5 years ago, and now it's $150. So it only went up 33%. So Walmart is outperforming Target, so you know. Target is not the boss you think it is. Not only that, do you know about stock splits? Let Godric tell you. StockSplitHistory.com. Go to StockSplitHistory.com. Very, very important site for all stock market traders. Why? Because if I put in Walmart, WMT, in StockSplitHistory.com, Walmart has had, count them, 10 stock splits. Hello. In 1975, 2 for 1. In 1980, 2 for 1. 82, 2 for 1, 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 2 for 1. 87, 80, 90, 93, 99, 2024. 3 for 1 in 2024. So when you say Target is going to catch up with, Walmart is going to catch up with Target, no, my dear. No, sir. Walmart has surpassed what Target can ever do in a lifetime. But hang on, wait. I lied. Target has had 4 stock splits. So Target is to be reckoned with. In 83, in 96, in 98, and in 2000. 2 for 1, 3 for 1, 2 for 1, 2 for 1. So you can look here at StockSplitHistory.com, and $10,000 in Target is now $31,000. So it only tripled. Okay? Is that right? According to this. Let me look at Walmart's. WMT. Walmart goes back farther. 10,000 here has 39,000. It has 4 times investment. Oh, okay, this is in the last 10 years. That's why. That's what that's for. So, would you rather have triple your money or 4 times your money? That's the difference. So, Walmart actually is higher if you count the stock splits. But your question was, um, can can um, can Walmart catch up to Target in price? Okay, let me look again. Okay, so you want Walmart to go to 148, and now it's 83, right? Let me take a look here. First of all, Target can't even keep up with its own price because Target was in the pre-COVID was $262, and now it's 148. So it basically lost half the value, almost, in either 3 years, whereas Walmart went up. So don't worry about when Walmart catches up to Target. I want Target to catch up to Target's old price. That's what I'll be impressed. And Walmart, by the way, hit an all-time high just recently. In the last month, hit an all-time high. So Target's the one that needs to perform, not Walmart. Just saying. Just use some perspective. Okay, questions. Appreciate you guys. Guys, thank you for the likes. Dude, love those likes. Appreciate that. You guys, if you want to throw me some cranes, if you gift, I won't say no. Throw me a sub for $5 a month, and I will talk in DMs. I will advise on trades if you want that. Advise you on how to do these trades, naked puts, cover calls. I want to talk about a deep in the money cover call tonight. Can we do that? Appreciate you. I buy long-term options. I don't buy shares. Dan the man. I buy long-term options. Thank you, Dan. Dan, probably you'll agree that newcomers can lose a lot of money in call options. And sometimes call options can get crushed if the stock swings against you. Whereas the shares are a little more resilient, at least percentage-wise. However, if you're doing options, my friend, you do you. Some of these traders go out 1 year, 2 years, 3 years in these calls. They make great money. I'm not mad at you. I'm just going to say that when I mentor, I tell people to start with the shares because they seem to be less volatile. The shares may move 10%. Options can move 20, 30%. You know what I mean? So I just want to look at the safety first for these children when they start. They got to take baby steps, I think. But Dan, man, you do you, man. If you get those calls going, not mad at you. Can you run me through it? Jacob Arden. Can I run you through it? How do you do options, Jacob? Jacob, you come to Godric for how to learn how to do options? Oh, man. All right, look. First of all, you have to get a good stock. I mean, quality. Like stock that you're going to bet is going to be around in 5 years or 10 years. And one of the ways to do that is to look at the last 10 years, that there's a chart that has been around for 10 years or 5 years. You guys get these new companies that just started this year. You know what happens to I think 11 out of 12 companies go broke, bro. And the stock market is no different. Some of these companies are fly-by-night. Was it Coca-Cola who just hit 100 years on the stock market? Hello. That is a real company with real employees, with real product that provide services and products to 100 countries, 150 countries that have a profit, that shareholders can buy their shares. You can go buy the product at any local store and eat their product. McDonald's, Coca-Cola, Starbucks, Netflix, can stream to your living room. Amazon delivers to your door. Google, Microsoft, Meta, you get it. Roku's one. Palantir, no. Palantir, they do counter terrorism. Sorry for the interruption. So you can't buy that company. Boeing has some disappointing earnings. Can't buy Boeing planes unless you're Trump. So Get a company that you can buy the product that is available in ideally a lot of countries, not just your own. And then, let me break it down for you. If you can, let's use Palantir, okay? PLTR. I already talked about the Tesla. Basically, you're going to spend $21K, buy 100 shares, write a cover call above the strike price. So if it's 213, write 225. If it's tomorrow, if it's 240, write 250, 255. Why? Because you're allowing for some share growth plus the premium, whether it's $1,000 or $1,500 a month. It's every month, bam, 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 like that, clockwork. And that pays for your bills. And if you can pay all your bills consistently, keep the shares, retire in the stock market. Now, the cover call mechanics is if the stock swings up past your strike price, let's say you write to Tesla 250 and it goes to 255, 260, it'll sell. The option, it's called getting assigned. So it sells at that price, you get cashed out, no worries, that you get full profits. And then you just have to go back and buy the shares again and do another cover call. However, you may just not want to buy it back. If the stock swings up a lot of points, you may want to just wait. Because you buy it back for higher, it could always come back down. So, patience? Write it down. Patience. Maybe you want to go into another stock that's dipped. For example, today we had a dip in McDonald's. We also had a dip in Palo Alto Networks, PANW. We had a dip in Tesla before the earnings. And then earnings hit and then it's jumped up. But the point is, if you buy a dip, you're buying value. You're buying it for less. So you're being patient, waiting for that dip. You get in, you wait for the cover call, you wait, you buy 100 shares, you wait till the stock goes up a little bit, and then you write the cover call. Timing. Because when the stock swings up, it pays more for the cover call. When the stock is down, it pays less for the cover call. It's better off writing the put rather than naked put. So let me show you the Palantir. Oh, by the way, if you're getting $1,000 on Tesla, it's around 5% return a month. And let me do Palantir. PLTR, okay. They do counterterrorism, okay, government contracts. But look, it's $43 a share, $42.59 as of close, and then went up in after hours. 43, close enough. But I'm gonna use the price of the close today because the option price is from today. So you're gonna spend $4,000, okay? I'm gonna walk you through it. Go to calls all. You're gonna write a cover call every month. You're gonna write it higher than the strike price, okay? 30 days out. In this case, it's the 23rd, so you're gonna write November 22nd, 29 days out. Close enough. If the stock is 43, right, you're gonna sell the 45 for 247, okay? So, buy the shares for $43, which is $4,300. 100 shares. That's the minimum, okay? And then you're going to write the cover call 2 points above for the 45. Or you can write the 46, which pays you $209. So you look at the bid and the ask on the options. You see back here, the bid and the ask. You get paid to bid. You have to pay when you sell. You have to pay to ask when you buy. So when you write the cover calls, you're getting the bid, okay? So technically you own 100 shares. You're getting the value by selling the cover call. You create the option. The option buyers buy it at the market price. In this case, it was $12 for Tesla here, $10 for Tesla here. But for Palantir, it's $209 on the 46 and $247 on the 45. Write that down. So let's do the math, okay? Calculator. 2.09 premium. That's $209 every 100 shares of Palantir. Divided by the share price of 43. 4.86% return. Okay. That's for selling the 46 cover call or writing the 46 cover call is a proper term for it. You agree to sell it at $46, basically. Only if it goes past 46 will they actually take that from you and sell your shares out at 46, which means you'll get another 3 points, 3 points of share growth. So add another $300 on your $200, okay? And then if you agree to sell the 45, which I probably will do instead of the 46, it pays you 247. So write this down, 2.47 divided by 43, share price, your investment. 5.74% return on that one, which is 57% return in 10 covered calls in a year, and 114% return in 2 years, which is where you're gonna hit the cash cow, which is where like you're just gonna have like streams of money, and you're not gonna worry if the shares drop 10, 20 points because you already have all these premiums. So think about writing 10 covered calls a year, okay? If you're getting $200, 209, that's 2,090 a year on 10 covered calls. If you're getting 247 for the 45, you're going to make $2,400, $2,500 a year, close enough, on your 100 shares of Palantir. And the share price is going to move every month, so you're just writing above the strike price. So you're trading away that upside for a predetermined income. So if you have the shares and Palantir shoots to 60, well, you make good money. But in that case, the shares, the shareholders and the option buyers, the call option buyers made the most money. But the covered call buyer is going to make 43 to 46 is going to be $300, and then the $200 for the premium is only going to make $500. So your upside's capped at $500. But here's the thing, I want you to understand: the $500 can come in every month, and the $200 are going to come in every month to write that cover call. But when the stock shoots to 60 or even goes down, that's not going to happen every month. So it's going to be up and down. So it's better to have one bird in the hand than two in the bush, because you're getting predetermined income. You can pay your bills, or you can buy more shares, and you do it every month. It's like getting a dividend, but you get a dividend every month. So you have a 5% dividend, which is a good dividend for a year. You can get 5% a month on some of these good quality stocks. Thank you guys for the likes. Appreciate it. Ooh, 3K likes. Nice. Got some people in here. Guys, this is Godric, your stock market mentor. I come in Monday nights, and in this case Wednesday, because I'm just got your back. I'm going to show you Tesla, how it jumped in after hours. I'm talking about McDonald's, how it pulled down the whole Dow Jones, how it's probably a buy. I'm talking about McDonald's, how it pulled down the whole Dow Jones, how it's probably a buy. I'm talking about McDonald's, how it pulled down the whole Dow Jones, how it's probably a buy. I'm going to talk about a couple other trades I'm showing you. Zane Dita, did you sub? I only take subs. If you guys want to sub, it's only $5 a month. I'll walk you through these trades. I'll show you my system. You can DM me, answer all your questions. Show you how to make monthly income and retire in the stock market. Questions. I'll bet you think Tesla is good. Huh? Oh, TSLY, is that a different stock? TSLY? Can I look that up? TSLY, let's look it up. TSL. But to your question, sir, about running you through it, I just ran you through both Tesla cover calls and Palantir cover calls. One is a $21,000 investment, and one's a $4,000 investment. Derivative income, title, yield max, Tesla option, income strategy. Thank you, sir. They're doing covered calls, income strategy on Tesla. See, so they're taking my strategy. I know it's not mine, but and they're doing it for you, and they're giving you some kind of return. So here's my take. Anytime someone's managing your money, they're taking their cut. Guaranteed. They're not doing it for free. When you see Morgan Investments, JP Morgan, Goldman Sachs having big ass gold sign in their building, big ass blue neon sign at night. They got floors of brokers, traders. All that, they got payroll, all that costs money. They're not managing your money for free. They're taking their cut. Okay, so when you have any kind of strategy, ETF, income strategy, someone like you or me, maybe that's smarter, is managing a bunch of money and complete the verification. I think they gave me a verification and they didn't I got some inactivity for some reason. But so I wouldn't do this because why? Because they're gonna try to make you some money doing these cover calls, and they're gonna take their cut. So what I teach you how to do, I teach you how to do your own stock selection, do your own trades, and make your own money and give nobody a cut. You cut out the middleman. That's what I'm teaching you how to do. Make your own portfolio, make your own ETF, make your own investment to do yourself, to be not have to worry about somebody else taking their cut. But if they did it right, this TSLY will probably do fine. Probably make a lot of money. I don't know how it works. Not interested. I'd rather do it myself. All right, I teach you how to do it, so you don't have to rely on these guys, these Goldman Sachs guys. You don't need them. You got Godric, and we got our community. By the way, I have a YouTube. Check out my YouTube. It's linked to my profile. A lot of videos. We have a community. We can message, talk. TikTok has a cool message system. Send me a message. I'll get back to you. Ideally, just one question at a time, please. Thanks, bro. I'm glad people like you are in the market. The Boggs account. Thank you, Godric. Oh man, you're welcome, bro. Dude, this is my plan. Get us together, enough of us. Get a boat, take it to the Caymans. Just be out there, fishing or whatever. Just wasting time, drinking in the sun, whatever. When our stocks are just going crazy, cover calls, naked puts, dividends, just building up our accounts. Because I don't want you guys to be at Walmart, checking receipts, at 75. Because, there's more than just working for 40 years and then being broke, having no investments, having no savings, having no stocks, And stocks are just as good as any other business. It's just that you just have to know how to do it. If you have a comparable business, go ahead. I'm not going to say stocks are better. I just know how to do these trades, how to make the money, and I'll show you. Nike will ever bounce back. Nike. Pure Joy. Will Nike ever bounce back? Let me pull up Nike. I have Nike in my retirement. Haven't traded it in a long time. I had 100 shares and now it's 1,400 shares because they had so many stock splits. And the price is higher, 80. Nike had a really good run over the last, say, 20 years, and now it's come down. I think they're just getting competition. I think it's probably a buy pull right here. Buy Nike. If you look at the 6-month chart, it seemed to have hit a bottom. I don't see it. It's not a cover call stock. It's a long-term share growth stock, and it's also a dividend, 1.82% dividend. So I don't think it's going to be that exciting. I think that they're facing competition, but they're going to be okay. Long-term, just hold your shares. If you're trying to make a monthly income, I would just hold the shares, get the dividend. I would do a monthly income in Palantir, in Tesla, in Netflix, in Roku. These cover calls pay great. You even do Apple cover call. Apple pays about 2.5%, just enough. Nike, together with its subsidiaries, engages in design, development, marketing, and safe athletic footwear apparel, equipment, accessories, and services worldwide. The company provides athletic and casual foot apparel and accessories under Nike Jumpman, Converse, they own Converse, Chuck Taylor, All-Star, One Star, Star Chevron, and Jack Purcell Trademarks. I didn't know they had all that. Volume is 7 million. That's great. Share price 80, nice and robust. 5-year chart is making money. It was, well, hang on. It was 90 5 years ago, so it's maintained. Well, it's down $10. Okay, because what, it hit a high of 174. Then it sold all the way down to 80, where it is now. So yeah, it's kind of in the dumps right now. But it looks like the volume, it looks like it hit a low, I'm just gonna say. PE is 23, so kind of low, kind of fair, PE. Market cap, 119 billion, not too big, not too small. Let me pull up stock splits because this is important. Nike, NKE. 6 stock splits. There you go. See, I told you. In 1990, a 2-for-1. In 95, a 2-for-1. In 96, a 2-for-1. 2-for-1, 2-for-1. Actually, this is wrong because it was a 3-for-2 in 2007. It was a 3-for-2. So that's wrong. So I am correcting StockSplitHistory.com. They made a mistake. But point is, they have great stock splits. They have great history. They're down. I think they're facing the same problem as Disney. They're just hitting competition. So, like, Disney was unseated as the #1 entertainment company unseated by Netflix. Because Netflix is just better and just more versatile and just more streamlined. And Disney's like an old brick and mortar. So I think Nike will be okay. Just you have to be patient, and if you want to sell, go into something a little more pizzazz like Nvidia or Apple. I think you get a better return. I think that's basically it. There's a lot of competition for Nike, like they don't have an AI department, and artificial intelligence is like what's driving Nvidia, and what's driving these other companies, AMD. Taiwan Semiconductor, these are really hot companies right now. So we talked about Nike, we talked about the cover call on Tesla, on Palantir, and let me show you this trade behind me, can I? This is just something, oh wait, hang on, wrong picture. This is something I want to show you guys, what the millionaires do. Millionaires don't need to make a lot of money, a lot of big returns. They just want to have a small, safe return. Okay, so what they will do is they'll write what's called a deep in the money cover call. A deep in the money cover call is a strategy that is not a lot of people don't do it. I should tell you, it's not a common strategy. But what's happening is you're protecting yourself from the downside. Okay, so any of you guys don't mind making you don't want to make double your money. You don't want to make a huge return, 5% a month. You want to make a little bit of money and be safe. This is a strategy I'm going to show you. Let me tell you about it, okay? So you buy Tesla here at $213, which is $21,000. It went up after hours, so it's more tomorrow. But if you did buy it today, you'd write a deep in the money cover call. Look at this. If you go to one, you ask yourself, how low can Tesla go? Okay, if it gets slammed, and I was talking to one of my colleagues earlier, and he said 180. So I looked at 180. I said, great. So we'll agree to sell it at 180. Write the deep in the money cover call. But look, they was paying $36.85 to sell it at 180. But look, the price we bought is for $213. So let's do the math. Watch this. This might blow your mind. 213.65 minus how much we getting? 38.65. 38.65. Actually, I did it wrong. Sorry, I did it wrong. Cancel that. We buy the shares at 213. We agree to sell them at 180. For that, we get paid 38.65. So it's 180 we have to do. 180 plus 38.65 premium, which is we're gonna get back $3,865. Honestly, that's how it works. The price we're getting back is $218.65. Is that even right? That's a lot. Wait, let me do it again. Let's just make sure. It's $36.85. I screwed up. Dyslexia. $36.85 plus 180. Okay, 216. Okay, so here's what's happening, guys. Pay attention. We buy the shares at $213.65. It's going to pay us $38 right to cover call, in the money, 180. We're getting paid to share price $216.85. We're getting $3. We're getting 3 minus 213.85. Oops, 65. We're getting $3.20. Still, you know how we're getting $15 for writing the 225, and we're getting $12 for writing the 225. We're getting $10 for writing the 225. We get $12 for writing the 220. We're still getting $3 for writing the 180. So what a millionaire will do is we're going to agree to sell the shares at 180. Because what? Because that protects us if the stock drops all the way down. We're protected because we're getting paid 38 points, which brings our cost to 216. Actually, that gives us a profit of 320. So we're going to get paid like we're going to agree to sell the shares at 180, and that's going to protect us if the stock drops all the way down. So even if it drops all the way down to 180, we'll still get $320. Let's do the math. 3.2 divided by 213. Actually, yeah, 213 because that's how much we paid. 65. 1.49%, 1.5%. Why not? That's 15% a year. So the deep in the money cover call trader, millionaire trader, doesn't get hurt if the stock drops from 213 to 220 to 210 to 200 to 190 to 185. No worries, because he already got paid from 180. And he's making a $3 profit. Until it hits 180 is when he starts losing money. His break even is going to be 180 minus 320. That millionaire investor who wrote deep in the money cover call is not going to break even until he has 176 share price. And then below that, he starts to lose. And above that, he makes 320. And you might do that before earnings because earnings can go either down or up. In this case, it went up. So he's good. But that's the deep in the money cover call. Take a picture. That's 1 month out. It pretty much always works. You'll get hurt if stock were to drop below 176. But you would only, you have 50 points of protection. That's why that trade's good. Like, you just wanted to be safe. Like, just give me like a few $100, you know? Like, the shareholders are in danger, can lose 50 points. That's $5,000 for them. But the cover call trader has that premium. And the deep in the cover call trader has all that protection. That's how it works, man. Write that down. Maybe you want to do that trade. Some of you guys who maybe want to be more safe, don't need to make a whole lot of money. What calls you buying? We wink at hoodies. What calls am I buying? I'm selling calls, bro. Like, buying calls is tricky, you know? You need to trade those calls if you buy them. You need to trade them at a profit. Sometimes they go down. Sometimes the trade goes against you. When you sell calls, you get the money right up front. So who's better off? What's your financial plan? McDonald's? Walmart? At 75 years old? 80? All right, guys, we're about to close. I appreciate you. Thank you for the likes. Thank you for everybody who gifted me. And if you want to sub, it's only $5 a month. Teach you these trades. Follow me. I'll come on every Monday night and also sometimes on Wednesday, but at least once a week. What happens when the strike price is at the money? Tell me how to say the name. New Week. Oh, hoodies. Okay, so when you sell the strike price at the money, it's fine. Okay, so you get more money on the cover call. So like if you were at Tesla, let me show you Tesla. I have Tesla here. If you run the strike price at the money, let's say it's $215, you get more money. You get $1,400, $1,420, and for the 210, you get $1,685. So you get more money return, right? But here's the problem: you don't get any share growth because the stock is, in this case, 213. You agree to sell at 215, you only get 2 points of share growth plus the premium. But if you wrote higher, if you wrote the 225, we can get another 12 points of share growth, you see? So you always allow yourself to get some share growth on cover calls. Unless you're going to do deeper than cover calls, different strategy, okay? In that case, you're getting a 1% return safely. But in this case, you're getting a 5% return. Let me show you the return for the at the money. At the money, let's just do the 215. You're going to get paid $1,420. Watch this. Which is $1,400, $1,420 divided by the share price of $21.65. 6.55%, 6.6% return. Hello, that's 60% return a year. But you know what? I wasn't telling you the whole truth. Okay, sometimes the shares will come down, so you'll have your 50%, 60% return a year. But what happens when the stock drops 10%, 20%? That's going to cut right into your profit. So you might only make 30% return. I won't be mad at you, And it might take 3 years to get your cash cow. Okay, an extra year, The stock may swing against you. The real estate market may come down for those real estate investors. Same thing with stock market. So, the share price may dip. It may eat into your profits. Look, if you're getting 10 points a month on Tesla, and the stock drops 30 points, well, that's just 3 months that's going to take you to get out of that hole. That's all. Look, let the stock drop 30 points, get 10 points a month, and then what? Then you're break even, you're in the black, and then the rest of the year, ideally, you're going to just get profit $1,000 a month, and maybe you'll make 35% return. Won't be mad at you. Play with it. That's what happens. You can do it, but because our stocks are vetted. We're looking for volume. We're looking for stock splits. We're looking for dividend, PE, all these strategies we want, these check marks that have a cover call, that have to have a price you can buy, have a high share price, a 10-year chart, a 5-year chart that doubled, a new high. If it's a new high, that's a requirement to buy a stock. That's a green light. If it had an all-time high. So these stocks we're buying, we're looking at, I'm showing you, have been vetted, are great stocks that are what? Going to go up over 5 years. They're going to go up over 10 years. Microsoft, Apple, Google, Amazon, So allow for some share growth, because then you're going to get share growth plus premium, and that's why I generally wouldn't write a cover call at the money. I would write it higher so I can get that share growth extra. That's why. That's how it works. Give me my golden nuggets, man. What's your portfolio size? Mohammed. I have a small account. I just pay my bills, do what I gotta do. I get in trouble showing my real account. But look, if you're at $6,000 a month, that's your bills. Here, look, we're getting 5% on Tesla, right? I'm gonna show you how small of an account you need. We get 5% on Tesla, right? Let's say your average cover calls are 5%, and that's what you do, right? Do this math. Write this down. If your bills are $6,000 a month, right? Watch this. Okay, you go 6,000 and divided by your monthly return. You're getting 5% Tesla, 4% in Palantir, 6% if you write the lower call. I just put 5%. So you do 6,000 So you find out how much money you want to make a month. $10,000, $3,000. Just say your bills are $6,000. And then put divided by your return you can get on these cover calls, which is 5%. In this case with Tesla, 5.5. Divided by 5%, that's 0.05. Equals 120,000. And let's confirm that. 120,000, that's 120K times 0.05, which is 5% a month on Tesla cover calls, and other stocks too that equal 5%, average, $6,000 a month. So if your bills were $6,000, just saying that was the case, and you know how to make 5% on your cover calls, give or take, more or less, 3 to 5, 3 to 6, you'd only need 120 grand doing cover calls. Not even all your account, just a good portion of your account to make $6,000 to pay your bills consistently with cover calls and make puts and tiring the stock market. You don't need a big account. I want to show you guys one thing, but I'm going to let you drool over this. If you will drool. This is Palantir. Palantir is not a great company, but it does pay a great cover call. I'd like to look at the market cap, 9.1 billion. Volume, 35 million. Share price is kind of low, but that's what it is. I want to show you. I'm going to show you this next. You click on options, okay? You go 1 month out, ideally. You're writing a cover call. Buy the shares, buy the cover call. Look at this. Now, I talked about naked puts, and I talked about cover calls. I want to show you something. Right here, it shows both calls and puts for Palantir. And the at the money is around 42, maybe 43. Same difference. I circled that. That column in the middle is the strike. Look at these. Look at the put for the 39 is paying 172. And the put for the 46 is paying, I can't see, it's been blocked off. Here, let me check it here. What does that put say? What does that call say? Palantir. This is for November 22, next month. Options. I'm going to show you. So, once you get experienced, not saying start out this way. I'm teaching you guys about the cover call and the naked put. You can actually write both. It's called a straddle. I circled the straddle for you. This is a trade that I'm going to show you more. I'm going to tell you more about next week. But I'm going to just tantalize your taste buds. So the 46 is paying 209, okay? And the 39 put is paying 172. Okay, so let's do the math on that, first of all. Here we go. 2.09, which is $209 off every 100 shares of Palantir on the cover call. Divided by the investment of $42.59 equals 4.9% return. Okay, on the cover call. Now let's do the put. Okay, 170. You can sell that 40 put, but I want to tell you that the 39 put is better to sell because you have that buffer. You don't want to necessarily take those shares, so you want to sell the 39. Okay, so 1.72 premium on the naked put divided by share price of 43.59, 42.59. 4%, okay? So you got 4% on the naked put, and what was the call? 209 divided by 42.65, and 4.9% on the call. Now watch this. I don't want to explode your brain, but watch this. You can write the straddle, which is both write the put and the call at the same time. You get double the premium because they only charge you for one side. They're only going to hold the requirement for doing one trade. Why? Because only one side can get assigned. It's either going to go up or down or the same price, but they both can't hit. So when you do the straddle, you're actually, this is technically a strangle because the straddle is actually if you sell the 43 and the 43, but this way is called a strangle. Same idea. You're selling the 39 put, which you don't want to get assigned necessarily, and you're selling the 46 cover call. You probably don't think it'll pass 46 very much. If you do, I would write the higher one. But we're going to get double the premium, and we only have to put our money up once. So when you do the straddle, write this down: straddle or strangle, you're getting paid double twice. In which case, 4% on the put and 4.9% on the call. You're going to pay 8.9% per month on this straddle. They're only going to hold the same amount they would hold to either do the cover call or to make it put. So we're technically only going to hold, in this case, $4,000. Less really, but I'm not going to put you in margin. So in this case, you only need $4,000. You're going to get 8.9% return, so you're going to write both of them. And since only one gets assigned maximum, you're going to get paid for both, and they're going to hold your money once. It's like if you wrote the naked put in one account by itself, you would get 4%, 172. If you write the cover call in another account, you would get 4.9%, which is 209. But if you wrote both in the same account at the same time, they match it up to what's called a straddle strangle, and they give you both premiums and only hold your money one time. You get 8.9% return or 89% return for the year. Now, it's more risky because technically there's double chance you can get assigned. So if the stock drops, let's say, below 39, you're going to have to buy their shares at 39. But if you're getting 8.9 points, that's almost 9 points, your break even is 30. You don't lose any money until it goes below 30 because you get 8.9 premium on the Palantir because you get both the call and the put. Did I just explode your brain? We'll talk more about it next week. DM me, send me a sub if you want to learn. You want to ask me questions, just one question at a time. God, your care, stock market mentor. I appreciate you guys. Thank you so much. Until next week, the new sub, I'll DM you.